AVI is primarily a food company with more than 53 brands in its portfolio. Its beauty products portfolio includes Yardley, Lenthéric and Coty. AVI has a market cap of 17 billion rand and a price to earnings ratio of 17.
And if you like the Tiger share price...
Oh, Avenge. This is construction industry.
No.
I think we should try AVI. That definitely isn't in the beauty product range. Otherwise, you've got some very hardcore beauty products
I mean,
there.
AVI has traditionally came out of the food space because the biggest parts of the business were the snacks and the biscuits and all that. And then Irvin & Johnson, and then all of the sort of chips like Willards and so on and so forth. Then a couple of years ago, they made the entry into Spitz. And the food kind of got a little diversified into footwear, exactly. Jimmy Choo, it's done fantastically well, so Simon Crutchley is to be given a thumbs up for that. But the business that we're talking about here is a perfumes-based manufacturer. It's Coty, Lenthéric and so on. It's a factory in Cape Town. Quite a good business, and it's made good money for them over the years. And the marketing element, I think this is where we focus on that marketing element. Have they got it right?
Right, I think AVI has definitely got it right. Their marketing is superb. And you can see that in the results. I mean, if you compare last year's growth in the top line to Tiger Brand's growth, I think Tiger's was slightly down. AVI was up about 11%. Albeit at lower margins, AVI is still in the upper teens, but you can see that margin increasing year on year. So I think they're doing a great job there.
Now, where is it going from here? Because it sounds as though this could be a nice bolt-on for one of the other companies.
Is about to appear in the next second.
There we go, AVI.
I mean, that is about the best
Then
chart.
there was light.
I mean, we've seen it. It was like 12 Rand a share back down here, and it's just gone up like a truck to 50.
We're sitting here just at 50.
So, 50. I mean, it's really executed across the board. People have loved it. It's got the right scale. A couple of years ago, they were looked at by Tiger as a potential acquisition target.
Well, that's what I was saying. Couldn't this be a hot bolt-on acquisition for any of them?
The trouble was that deal was sort of nixed from a competition point of view, and there were some anxieties about whether it would give somebody too much power, because right then and there was the big saga with bread in the Western Cape and Pioneer, and everybody was implicated. So I think they probably will soldier on in their current format. Nice company, solid.
Can they continue this performance from a share price perspective?
I think it's very, very possible, yes.
Do you?
Well,
just because they've got their story right and strategy right, is that what you're saying?
Because they've got their strategy right, and because, like Paul mentioned, they've got fantastic management. Simon Crutchley's done an unbelievable job. And, you know, when you've got great management with the right strategy, you get a good result.
Look, I think they do need to get shot of the fish business, because Irvin & Johnson has battled. It's recovered quite nicely this year, but basically I think it's a horrible business. The fish, as we know, are getting smaller and harder to find. But that notwithstanding, I think they'll continue to do well across the board. But
so you'd like to see them get rid of any non-core assets, as you're saying?
Well, look, I think the branded goods industry, if you're in consumer goods and you're in emerging markets, that's a great space to be for the next 20 years. But you've got to be in the right stuff, and you've got to be the stuff that's got good margins and where you can extend and develop and build the business and get out of things that are, you know, kind of declining in significance. So.
Is there any risk for AVI?
Well, for all food producers, there's always a risk because they use quite a few soft commodities as their inputs. As we know, the soft commodity prices can do many things. They can increase significantly, like the maize price. For example, the palm oil price, which is quite important to biscuits, has increased quite significantly. So there's always that risk. You rely on the company to hedge and manage those input costs well, but that creates volatility over the short term.
The other thing they've recently done is buy a company called Green Cross, which makes school shoes.
And comfortable shoes.
Yes, and now that seems okay. I thought it was a fairly modest-sized business, but they paid 300+ million for it. But I think they can just carry on.
Very visible store network they've got in terms of Green Cross.
Okay, so you're obviously frequenting the right malls.
When I was pregnant, they were the comfortable shoes that I could wear, the only shoes that I could wear, so I know where the stores are.
So I think they can continue to do stuff like that. You know, so I don't think it's a dead cert that they're going to take that from 50 to 100. But they seem to be on the right path.
What is a dead cert in the markets anyway, hot or not, on AVI, Daniel?
Look, we've held the stock in the funds for a long time. It was our preferred pick in the food producer space. It's run up very strongly. We still like the business. Like I said, you've always got commodity volatility in the short term, but we still like it, think it's a great business. So we say hot.
And you've got to mirror this discussion.
Yeah, it's interesting because I know Simon quite well. Our kids are friends, and he was a grumpy bugger when you spoke to him here. He said, "Oh no, the market's terrible." Now when you talk to him, he still says, "Oh well, it could be better." But you know, they seem to be.
Well, that's good investor relations, isn't it?
I suppose so.
Basically,
no, it's hot. Hot. What can I say?
There we go.